broker, you just tell people over and over, I was a broker for 10 years, or this is my portfolio right now. And there's no reward for being quiet when you're a capital raiser. You just have to broadcast what you're doing.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. I'm excited to have Ben Michel. Ben, how are you doing today?
I'm doing great. Thank you for having me, Todd.
Yeah, absolutely. Excited to have you on. Ben is the principal of Ridgeview Property Group. And prior to forming Ridgeview, Ben spent 11 years with Michel Commercial Real Estate as a senior associate, selling multifamily real estate. So Michel Commercial was founded by Ben's father, Steve Michel, and company is pretty big. It's brokered over $2 billion in multifamily. Ridgeview was founded in 2021, manages $18 million in multifamily assets, and Ben has been very strategic, and we'll talk about the strategy and how his approach has been good for the growth of the company. And so very strategic in the growth of the company, not just going and firing off and finding as many deals as possible. You're finding as many deals as possible, but you're only buying the ones that really make sense. So Ben, with that said, anything else you want to add to your background or just kind of what you're doing today?
No, that's a pretty good intro. Thank you. Yeah, started as a broker right out of college, 2010, and bought my first deal when I was brokering. I bought a couple duplexes in 2017, and then had kind of one deal that kind of changed the course of my career in 2021. And so the rest is history. Kind of hung up being a broker at that point and made the switch.
So that deal in 2021, what that changed the course of kind of your, being a broker to being now an investor. What was that?
Yeah, so I listed a 28 unit townhome complex in the middle of COVID, and it's in an exurb or suburb of the Twin Cities called in Jordan. And so I listed it, trying to get it sold, but it was in the middle of COVID, and didn't sell. So I ended up a year later.
Did it get no offers, or did it just get low offers, or what was why didn't it sell?
We just didn't get close to asking. It had been developed 2 years earlier. The sellers, they had their price in mind, and we just couldn't get their price. And all of my buyers were, terrified of what's about to happen with multifamily and with their investments. So then a year later, I connected with the owners, and they said, yeah, they're looking to sell, same price. And I ended up bringing in a high net worth individual, and we just paid the asking price that I'd been trying to get all along a year earlier. We bought it, and it was just the deal was a lot of fun. I liked the long-term benefits. I liked, I just liked the role I took on while I was buying this. And so that's when I decided to make the switch from brokerage to full-time investing, syndicating, essentially.
So I think it's got to be it's on my mind. It's got to be on everybody else's mind. I do know the answer, but look, you bought a deal that nobody wanted. Right. No, you listed it in 2020, you bought it in 2021. Nobody wanted it. It wasn't good enough. Why did you buy it? Then why was it all of a sudden good enough?
Yeah, that's a good point. It just, as a broker, things went dead in early 2020 and through the summer of 2020. And then things really picked up in the fall. And I would just say, just based on all my dead deals kind of came back to life in the fall in 2020. and that kind of gave me confidence. So during that same time, we went and took this one down, and so I was already rolling. I was already feeling better about the trajectory of you know transactions and what my brokerage income was going to look like, and just feeling better at that point based on brokerage.
So a lesson for me on this is that dead deals aren't always dead, right? And so this is a deal that was dead. Nobody wanted it. And the reason nobody wanted it is because of fear, quite frankly. And
Yep.
that's true. Like at that time, people were very afraid. It was really hard to sell. And by the end of 2020 into 2021, I mean, I sold 2 deals in 2021, and the feeling at literally in a 6 month time frame was so much different, and people realized that the world was not ending. I think that was the big thing in 2020 when you first listed that. Everybody thought like, holy crap, we just don't know what's going to happen. Are people going to pay rent? The government said they don't have to. Like, what's going to happen? I've seen this, and that was a drastic case, but I've seen this play out in my investing career many times where you think a deal is dead, and you put it on the shelf and it can come back to life and be a really good deal. Sometimes I've missed on them, right? Where I wasn't paying attention to the deal. And sometimes I've hit on it where I am paying attention and we do get the deal when it comes either back to market, maybe at a different price, maybe different terms, or maybe the market just fundamentally changes a little bit.
Yep. Yeah, exactly. I mean, I even put this on LoopNet. So,
That's where deals go to die.
everybody rags on LoopNet, but this was one of those, and didn't get enough traction on LoopNet at that time either. But um, ended up being a fantastic deal. And
How's that deal performing today? Like, have you been able to implement a business plan on it that has been successful?
yeah, so it's 28 townhomes that are 4 years old now in the suburbs of the Twin Cities. I mean, that's just the best possible product in my mind. And so we're doing really well. I think rents are probably up uh, 17 or 18 or 19% since we bought it 2.5 years ago. And it's been easy to run. So yeah, it's, probably one of my top performers for sure.
Awesome. Let's talk a little bit about brokerage. I want to talk about this. You got into brokerage 2010, which is actually a difficult time. Was it a pretty
Oh yeah.
slow time at that
Yeah.
point? Yeah.
When I was getting my license, the teachers, they were looking at us like, "What are you doing here? There's no business out there." But
You guys
but like you
doing?
mentioned before, my dad is a multifamily broker. He's got his own firm, so I figured, well, I can stick it out, and I want to work with him, and we'll make this work. And yeah, 2010, 2011, 2012 are pretty darn rough years to start out, but it's also, I was getting ready for, I was getting my skills up for when
Yeah.
the market picked up. So,
What did you learn in those lean years? Because I feel like you learn a lot more in lean years than you do in the years where you're just doing deal after deal after deal.
yeah, I would say
Or
the
maybe
biggest
what
lesson.
habits or whatever.
Yeah, exactly. The biggest lesson or learning would be, the ability to put your head down and just kind of plug away at at your skill or at your work, and without thinking about, oh, the market is stopping me from progressing or stopping me from making the commissions I should, because now 12 years later, I ended up starting this real estate firm, and it's way easier for me to start from zero uh, as a real estate investor now that I did it as a broker.
Yeah, you've already
Really,
done it once.
yeah. So, years ago when I had a couple duplexes and no multifamily, it just really, it didn't wear on me when I had set out to start a portfolio that I was starting from zero, or starting from a couple duplexes. It was just kind of like, well, this is what it looks like when you start out, and I know where I'm headed. You know, I know I'm going to go and buy some nice deals and build a nice portfolio, and I was already wired to just handle that process.
What lessons you grew up watching your family, your dad, and is it uncle? That's a
Right.
part of the business
Yep.
too.
Yeah. So my dad,
Um,
he is his firm, and then my uncle joined him. I would say now 30 years ago. I joined in 2010, and my sister ended up joining in 2018. And then
so,
there's two others as well in the company.
I mean, what any life lessons you learned watching your dad grow this business? I mean, he's growing a business from, you know, a lot of people don't know Michael Commercial that are listening to this. People in the Twin Cities know them, but the company over the last, especially, I would say since the Great Recession, has grown substantially. Um, but it's grown, especially over the last several years, has grown really substantially from kind of doing. It seems like, and correct me if I'm wrong, but it seems like Michael Commercial, when I was first kind of in the industry back in 2008 through maybe even 20 up to like 2015 or maybe even later, I was doing mostly smaller multifamily. Felt like they were selling a lot of deals that were in the 10 unit to maybe 60 unit range. And now Michael Commercial is seen as one of the players in the market that if you've got a 200, 300 unit building, you're going to give them consideration, and you're going to, list with them or some of the other bigger players in the market too. But um, is that correct?
Yeah, they've definitely had a really strong run in the past couple of years. I mean, 2 years ago, they sold two assets totaling about 200 million, just those two assets. And so, annually they've been regularly doing, a couple hundred million a year. They've actually been pretty strong for 10, 15 years. But I would say from your perspective, there was little to no broadcasting of what they're doing and the successes and closings, and there just wasn't any email blasts on on every deal they sold, and so their presence is 100 times larger right now in people's minds who are maybe not transacting on super frequently. So the presence is much bigger right now, but they've been, to be honest, they've been killing it for a couple decades now,
Okay.
especially
So
considering it's a small firm, four or
more
five partners, and
quietly crushing it previously,
yeah,
and
and
now.
quietly crushing it. Yeah, that's exactly what they're doing. But that doesn't do you any favors. So they changed in a big way in the last 5 or 10 years.
It was that on purpose? Was that why that change?
Just modernization across the board. So um, they modernized their marketing, modernized their um, email blasts. I mean, these guys, they've been doing this for 30 years. So you got to realize they started with physical OMs, and
No.
that they would drop in the mail to potential buyers, So it takes, these are guys that, you got to take some effort to bring them into the 21st century. And but they jumped on the opportunity in the last 10 years and really completely modernized
That's
everything.
awesome. Um, I want to talk about kind of your transition from the brokerage side to the investor side and some things that you have brought from the lessons learned from your experiences in the brokerage side into the investing side,
Yeah.
and how it has really helped you. So if you can kind of just start diving into maybe some of the lessons, some of the habits, some of the things that you've brought into your investing side from the broker side.
Yeah, I would say my time as a broker. number one, you underwrite a ton of deals. So you learn how to underwrite. You also you underwrite deals from every vintage, from every neighborhood. You know, in our sector that we operate in, and so you get to see what you know when you're underwriting assets where the rent is growing, you know, year after year, or other neighborhoods where rent is stagnant, or um, you know, so just the quantity of underwriting is a huge leg up for now when I'm investing. Um, you see a lot of different deal structures. So you might be a broker and you might see, you might have a guy come on your tour and he wants to buy the building. And then lo and behold, he, partners with someone else that out there. So you watch partnerships form, or you might get a peek into how someone is structuring. Maybe they're doing a capital raise and how they're structuring their equity. So underwriting, you get to do a ton of, and then deal structure. You just get to see how these deals are structured and how these GPs are doing these deals. And
And
then lastly, just
what's the most unique or interesting deal structure you've seen, or partnership structure that you've seen?
hmm,
All right, wait a second.
yeah,
I got to hold that thought, or keep thinking about that. But you said I interrupted you, so that wasn't good. So I interrupted you. You were saying the last thing. What was
yeah.
that again?
Lastly, I would say brokerage. You just get, in my case, you just get exposed to your this asset class. So, you know, the number of apartment buildings I've walked. I walked in the decade that I was a broker, and how intensely I'm watching my buyers, really intensely look at the roof. They're trying to see if it's crunchy, because they're worried about the insulation under the roof, and they're inspecting the boilers, and so just getting exposed to an expert who's who's analyzing a deal in this certain asset class. So it was a great education for me for the multifamily asset class, especially when I have a really smart investor, buyer, someone on the buyer end who I can kind of watch during his inspection, or see what questions he asks me to ask the seller of the property. So just exposure to an asset class is huge.
Yeah, if you really think about it, you had like a pile of mentors that you were able to learn from, all these
Right.
sophisticated and some non-sophisticated buyers, and then all these sophisticated and non-sophisticated sellers, and you're learning from them, and getting to kind of peek behind the curtain of what they're doing, what they're thinking, how they're acting. That's pretty freaking cool if you think about it. What a
Right.
great way to get into the investing industry,
Yeah.
is to be on the brokerage side. I didn't think about all those little intricacies of
Yeah.
the business.
Well, we could go into that. I mean, that is, if for someone who was starting out their career at square one, and if they want their final spot to be, their final role to be at owning their own firm, I think brokerage makes a lot of sense
It's a
as
ton of
your
sense.
first place to start.
Yeah, and multifamily, or whatever you're going to get into, right? That probably makes even more sense. I see a lot of people that, they become realtors because they want to be an investor. Well, if you're going to be a realtor selling single family homes, if you're going to be buying single family homes, it's fine. But if you're going to be trying to buy large multifamily, office space, whatever it might be, you probably want to get into that industry,
Yeah.
right?
Yeah.
Versus something totally different.
Yeah.
But there's a
Yeah.
lot of differences, and even for you, it would be a big jump to go from multifamily to office, just because that's not what you specialized in.
Right. Yeah. It's a lot easier uh, for me to look at multifamily deals, but also the lenders and my investors. They care deeply about my history as a multifamily broker.
So that has helped out for you strategically, for both the lending and the investing side. investor
Oh,
side?
for sure. Yep. So, we one of my first deals, that deal in Jordan, we got a Freddie Mac loan, and you need to have some investing experience with Freddie Mac. Well, I didn't technically have multifamily experience in terms of buying, but I've had some duplexes, and then at the same time, I had a decade of multifamily broker experience. So they
They
put
got,
two and two together, and they just called that, good enough for getting a
yeah.
Freddie Mac loan. And then in terms of investors, I mean, that's my, when I was first starting and I'm introducing myself to investors, that's my main selling point is 10 years of exposure as a broker. And so it goes a long way.
I got to go back to the unique deal. Is there a unique deal that sticks out in your mind? You don't have to say this, the buyer or the seller or anything like that. Was there a unique deal that you can think of that's been done that you were, a part of or witnessed?
There's some creative deals. I've seen a number of deals where I think the sponsor, not only did he have investors in the deal, but during the transaction, he ended up asking for, some paper from the seller. So uh, I would say, so by the time they close, I'm doing the math, and this sponsor um, is essentially buying this deal. Half of his down payment's coming from the seller, and then the other half is coming from his investors, and 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 the bank knew about the contract for deed as well. But you know, you see enough deals like that, and suddenly it doesn't seem so crazy to go out and put together a deal and pull some investors together and do a simple version of that.
Yeah, those are those deals. Those types of deals get me so jazzed up. I love those deals. My favorite deals are getting the seller involved somehow,
For
just
sure.
like just being creative. I mean, I got several stories of those that I've done, but one of my favorite ones is having one of the sellers actually reinvested in, LP investor, and so that was they took $800,000 of their proceeds and reinvested it back into my deal as an LP. And that allowed us to, basically raise less money.
Yeah.
It was a way of seller financing without being seller financing, because the bank wouldn't have allowed the type of seller financing that I wanted, the $800,000 of like a seller careback, they wouldn't have allowed that. So instead, they
Yeah.
did.
That's
We
amazing.
created actually their own special share class for them, and they got a different share than everybody else, which was a huge benefit. So, yeah, I love creative, unique deals. I'd love to. Uh, I think that would be fun to be a part of the brokerage side to see how many of those deals happen and where people go with them. Um, I would think seller expectations and seller mindset would be a big benefit of what you learn too. Is that do you feel like that's a benefit?
Yeah, I think having been a broker, one, I kind of understand what motivates sellers a little bit. And I still do a lot of cold calling and just direct reach out to try to buy deals. So I think I have a good idea on how to strike up a conversation with the seller and offer them some value. So broker 101 is, don't just call and say, "Hey Todd, are you selling?" Call and say, "Hey Todd, uh, this comp just sold down the street from yours. Just
Mm,
thought that'd be interesting." No need to call back, but you like a voicemail. You just leave that information, and no need for you to follow up. Just providing value. Well,
put the carrot in front of them.
yeah. So that's exactly what I do. Is when I'm cold calling, when I'm trying to reach out to owners, I'm you know loaded to the gills with market information. I know the sales nearby, and so I can provide some value to them. So that comes in handy.
That's awesome. what motivated you? I don't think we've said that. So you bought a couple duplexes, starting in 2017, but you were a broker, it's your family, it's family business, started 2010. You're seeing the success of the family business. Obviously, um, you're seeing your growth and the company's growth and you're part of that. And then 2017, you start buying duplexes. 2021, you've got this deal that's the difference maker. What it was, I don't see many brokers that go from brokerage to full-time real estate investors. And it feels like it just doesn't happen. And it probably happens, but it doesn't happen a ton, at least in my opinion. Maybe I'm wrong. But what motivated you? What was the reasoning for that instead of staying the course at where you were at for over a decade?
Right. Yeah, I would say um, over the course of my career as a broker, we would kind of joke around, but we're serious when we say, our clients are making more money, but they're not paying any taxes. And now there are plenty of brokers who are, they could easily be out earning a lot of investors, but there's a lot. It's a lot more tax efficient to be an investor. So um, that was part of it. In my case, I would say I'm more analytical than I am outgoing. So just doing deals seemed like fun to me, and seemed like something I could really get into. And I got a taste of it on 2017. My first couple deals did really well with those, and just was fun. So that's basically it. I would say, in comparing brokerage and investing, there are a ton of brokers out there who are, you know, the earning potential is super super high in both roles, especially if the broker is investing in deals. They're especially if they're just throwing money, into deals as an LP. Their earning potential is high for both. So um, they're both great. I've got nothing against being a broker, but just for me, it was a better fit and just seemed like it'd be more fun every day by day to go do deals.
Yeah, love that. And is it more fun?
For me, it is.
Yeah,
Right.
yeah, yeah. Not for
There's
everybody, but for you, you got to do what's good for you.
right.
Yeah. There's the risk aspect involved in it, and so everybody's not doesn't have that appetite. How does that play a role in I don't know, you moving forward,
Right.
or
Well,
maybe not, right?
yeah, there that's a difference between brokerage and investing or syndicating in my case, especially if you're syndicating and you're doing large deals. You're taking on a lot of debt, some of it personally guaranteed. So that's a massive difference between being a broker and sponsoring these deals.
Yeah.
So you just need to be smart about that and be aware. Um, you know, the other benefit of being a broker is that you're liquid. It's easy as an investor, especially as a GP, um, to lose some of your liquidity because every deal you might have a co-invest,
Yeah.
and you're waiting for these promotes. So that's a huge benefit to brokerage, is just you're making cash, or you're making money, and you can spend it right away, or you can invest it right away. And so yeah,
Yeah.
those I miss those days of being far more liquid, right?
As a real estate investor, I don't know many people that are very liquid. They
Right.
because it's just, first of all, I think it's in our nature to, like, we're going to keep on pouring money into new properties. so you're not going to be, you don't want to be liquid. It just
Right.
keep on
Yeah.
moving that
Well,
money
and
in.
you're working and you're earning equity directly for your work, and which
Yeah.
is super tax efficient, but that's equity, and it's not cash. So you need to that takes some time for that to, for you to have a liquidity event. So uh yeah, it's a common gripe amongst GPs is liquidity.
So take me through the step that you just recently took. You bought the deal in 2021. You bought another deal in, was it 2022? Was
Yeah.
it? And then you
December
just,
2022.
okay, yeah, end of 2022. And now you just recently bought your biggest deal.
Yeah.
Raised the most amount of capital you've raised. Um, I just want to, for the listeners to know, to see how you can take these big steps. What are some lessons that you've learned? Um, you know, let's start with the capital raising side. What are some lessons you've learned on the capital raising side, maybe, or even mistakes that you made, um, that you could pass on?
Sure. Yeah, so this last March we bought a 71 unit. We meaning I partnered with another um, GP, and 71 units in Crystal, Minnesota, so suburb of Minneapolis. And we raised 2.7 million for a total purchase price of 6.64. Um, and the capital raise was it went fine, but it was a lot of work. But it was I personally raised double what my largest capital raise had been prior. So it was a big milestone for me. Felt pretty good. And it's a tough time to raise money. Um, so it was great from that respect. Um, my biggest, you're asking about the capital raise
Yeah,
and
like that's a big step up, right? So
yeah,
what did you do? Like, what did you do in that process? Not
yeah,
maybe not just that day,
yeah,
but what did you do to lead to be able to? What do you think? Like, what made that possible?
yeah. So we were buying a smaller deal a year and a half ago, 24 units, needed to raise $1 million. And I got it done, but I had no newsletter. I had no official way to reach out to any investors. And the capital raise was really painful because it was just pulling teeth because I hadn't prepped enough people. So we got that done. And I basically
But by
just,
prepping, you mean like you hadn't had prior conversations, you
I
hadn't.
had maybe talked to each person or sent them one email announcing, hey, I'm raising capital for deals,
Yeah.
keep an eye out for future deals. And after that I was dead set on you know being able to raise more capital and just having my making my network more aware of what I'm doing. So started a newsletter, sent that out to a lot of uh, basically my whole Rolodex from my time as a broker. Um, Started going on social media more on LinkedIn and Twitter, and and then didn't get another deal together for a year. So then this deal was a year later, and now I've put in a lot of work. I've broadcasted to my network the deals that I've done, the successes that I've had, any nuggets of information, any knowledge I can share about investing, and just tons of investors came out of the woodwork um, for this 71 unit we just bought from those efforts. So they had now heard me, 10 different times talk about multifamily or interesting, what's going on a deal that I own, or what's going on in the market. So my network was prepped better this time around.
Yeah. And that's so huge. I mean, you hear it in sales, right? You can't just call somebody one time and expect them to buy whatever you're
Right.
selling. It's got to be, 5 calls, 7 calls, 10 calls, 20 calls. They have to see the information over and over again. You had a lot of people on that first deal that were kind of just behind the fence and peeking.
Right.
I guarantee it. You had a lot of people that were, you know, they saw the email, they maybe opened the email, they saw the LinkedIn post, they were curious, um, and then they started to pay more attention. And then this latest deal came up, and they had been paying attention. They had started opening your newsletters, and they started seeing more, and they said, okay, now I got to look at this deal. And they look at the deal and they invest. And now I guarantee you have a ton of people on this last deal that were peeking behind the fence, right? And they're doing the exact same thing as this first tranche of people that were doing that actually invest in this deal. And so the next deal you have, as long as you're doing your job, as long as you're continuing to put it out there and do your job and continue to contact these people, you're going to be able to raise maybe even double what you just raised, which seems impossible at times, but that's how this goes if you do your job the right way. And so you have to, of course, continue to grow your network. You have to be successful with the deals, and you have to continue to always be marketing and putting yourself out there.
Right. Yeah, exactly. And, you know, 2 years ago when I was struggling to raise $1 million, I had 10 years of brokerage under my belt. I had, at the time, I think I had a $7 million real estate portfolio. And, but I had nobody knew that. And, or if they knew about it, I told them once, you know,
Yeah.
and, so you just got to be repetitive. You know, I was a broker. You just tell people over and over, I was a broker for 10 years, or this is my portfolio right now. And there's no reward for being quiet when you're a capital raiser. You just have to broadcast what you're doing, uh, you know, at all times.
Well, just like the expansion of, you know, as a broker, if you're not making those phone calls, if you're not putting yourself out there, you're not expanding. It's like any business, you've got to put yourself out there. Otherwise, you're not going to get to where you want to go.
Right. And we had just talked about Michael Commercial, and I would say they were doing pretty good volume 10 years ago in multifamily, but you know they were not broadcasting every single deal, putting every single deal in all the finance and commerce and in the papers, in business journal, you know. And so now they're just putting a megaphone in everything they do and all the successes they have, and you know, it pays off huge because they'll sell they'll sell a 400 unit deal, and pretty soon when you're doing cold calls, someone will say, oh, I know your firm, you're the one that just does big deals, and you know I just have a 30 units. You know, so the owner of the building is thinking that you're just too big to even, you know. But anyway, so just broadcasting it, you have to broadcast what you're doing constantly.
Yeah, love that. Um, what's a success habit, Ben, that you have? Um, you know, something you do maybe on a daily basis, weekly basis, something that you is a must for you.
Yeah, I live and die by a checklist. So just an app, you know, that anytime I, you know, need to develop a new habit, I it becomes a checkbox that day. You know, for the next couple of weeks, a checkbox shows up and it says, you know, go, you know, run for 30 minutes, and suddenly I'm a runner. You know what I mean? Like
Yeah.
it's just I live and die by a checklist, and that's been, you know, the biggest difference maker for me.
Is there a specific app that you'd recommend?
I use one called Tick Tick. Um, yeah, works really well. But both you know daily tasks like I got to make, you know, 20 cold calls today, or working out, or you know everything. And then also, you know, when you're building a company, uh, you are always going to have ideas and things you want to execute on, but so you need to write them down, and they need to get done eventually. But so in this case, uh, I'll think of some big picture item and I'll just put it down, but I won't put a date on it. And now I've got a stack of tasks that, yeah, it's not going to show up tomorrow as a to do because it wasn't that kind of priority. But my thoughts have now been organized in, you know, future to dos are all organized. So
Yeah,
that'd be my biggest, you know, difference maker.
love that. All right. So switching gears to kind of our final questions, what's a favorite book you can recommend to our listeners?
Favorite book. Looking at my small stack of books here. I don't know. I just read the Elon Musk biography,
Hmm.
and I don't know. That one comes to mind as a good one. Sometimes if you read what he's done and his social media and his recent comments aside and everything, I mean, he just has incredible risk tolerance, but he's also just um, so um, you know he's just I don't know how to word it, but he's he basically goes all in on what he's doing, and then he doubles down on the next one. So one company to the next company, and it makes it more palatable to go and maybe take on some debt and go buy a couple of deals when you read you know the history of someone who's just doing what you're 1,000 times magnified,
Yeah.
some
Yeah.
like incredible career. So
Yeah.
it
His
makes it
risk appetite is got to be huge, but he seems very analytical about what he's doing. And when I listen to him talk, he's got a real purpose for why he's doing it. And whether you like the reason he's doing it for or not doesn't really matter. He believes that it's the right thing to do. So why wouldn't I do it? Right.
yeah
And I love that type of mindset. Look, if you are doing something you believe in, then go do it and do it as big as you could possibly do. And that's, I think, I feel like how he thinks is like, this is the way to go. Like electric
yeah
cars, like that's the future. All right, I'm going to go
yeah
build a company like Tesla and
yeah
make it as big and powerful as possible.
yeah. And for me, it's just reading his story is just energizing because I'm doing a very, compared to what he's doing, super low risk,
Yeah.
super conservative is what you would say. Just investing in real estate is just basic and conservative, but it just puts it in perspective, and so that's why I liked it.
Love it. What are your three pillars of wealth creation?
Three pillars. I made sure to prep for this. I would say first, I would say would be persistence. Um, whether you're a broker, an investor, or whatever you're doing, got to be able to start from zero and do the same tasks day after day and be persistent without getting a reward. So
Yeah. That's the key right there. Though without getting the reward, right? You don't expect a reward every time. You don't expect to get paid every single phone call you make. It's going to happen eventually if you put in the consistent, persistent effort.
yep. Number two, I would say taking advantage of compounding. So that means investing early or as early as you can, whether actually financially, but also it could just be investing in yourself as early as possible, trying to identify your strengths and what you want to, what you want to improve on, and skills that you could use the rest of your life. So compounding, and then in real estate, it comes down to growing your portfolio. Possibly doing 1031s and just and taking advantages of just what compounding can do. So, um, third, I would say education or just being a lifelong learner. Uh, always reading, always trying to network with others who are maybe ahead of you and you can learn from. So I just think people who are well connected or who are constantly trying to glean some information off of those who are ahead of them, I think go a long way.
Love it. Love it. Ben, really appreciate it. Appreciate the time. How can our listeners get in touch with you?
Yeah, sure. My company is called Ridgeview Property Group, and the website is ridgeviewpropertygroup.com. Otherwise, it can reach me on Twitter. I'm pretty active there at Ben Michael CRE. So that's at BenMichelCre.
Awesome. Ben, again, appreciate it. And you have a fantastic rest of the day.
Thanks, Todd. Thanks for having me.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.